In this presentation, we will continue on with our S Corporation Comprehensive Problem Part 10 M1 adjustment related to tax-exempt interest. We'll be entering this into tax software using Lacert tax software, Lacert owned by Intuit, the owners of QuickBooks, but the data input process and the generation of the forms will be similar with other tax software as well. If you would like to enter this directly into the forms, the tax forms, we will provide those, and they can be found on the IRS website at irs.gov, irs.gov. Here is Form 1120. You'll recall last time that we had reconciled the income amounts and that on the Schedule L, which is the balance sheet, we are in balance. So now we're going to be entering this adjustment. If we go to our Excel worksheet, then the adjustment that we will be considering is that related to the interest income. So we've got the $2,000 left over here. We're going to say that our information says that that's tax exempt interest income. So it's going to be tax exempt interest income. We're dealing with this $2,000 that's left here. So we're going to go back to our forms. I believe this is going to be an M1 type of adjustment. So I'm actually going to go to the last page here, page 5, which has the M1 adjustments. And I can see up top in line 5A, I have the tax exempt interest. That's where I believe this should go. It should be adjusted here. That then will adjust and it should be adjusted on page 1 of the 1120S. So let's make that adjustment. Those are the two sides, the journal entry. So I'm going to right click here and say jump to the input screen. I'm going to go to the tax exempt interest. This is where I believe it should go. We're going to say 2,000 here. I'm going to then go back up to the forms. So let's go to the forms, see what happens. There it is there. So there's the 2,000. That looks right. Does it throw us out of balance? Let's check it out. Go to page 4. We're going to say, does it throw us out? It does. It throws us out of balance. Why? Because the other side should be on page 1, which is still there. Other side being included in the other income. This 2,000 needs to go away, I believe. How to do that? We're going to go back to the detail. We're going to go then to the income out amounts, and we have this 2,000. That needs to go away. Now, I'll do this by basically marking it here. I'm going to say this is an M1 adjustment. This is going to be the other 2,000. Now, this is kind of messy to look at, but it shows you the journal entry. You go back in there and delete these items later, but for a review process, really nice to say, okay, here's the amounts that we recorded, the 4,000, the 2,000, and that matches out to the 6,000. And so this is one side of the journal entry. The other side is either on a Schedule K or the M1 adjustment, in this case, the M1. So then I'm going to go back to the forms and see what happens. And so it adjusted this number. So we'll see if that's correct later. Does it put us back in balance with the Schedule L, the balance sheet? Let's scroll down and say, does that put us back in balance? It does. So the balance sheet's back in balance. So that's a good sign. Now let's go back up to page 1 and make that adjustment in Excel and see what that journal entry basically looks like and what's actually happening with the reflection here. So we're going to say, all right, here's the 2,000. That needs to go down to 0 for tax purposes. So I'm going to say that's a credit. We need to debit it to make it go down to 0. The other side I'm going to put down below so it won't be included in our calculation of net income for taxes. I'm going to call it an interest income exempt M1 adjustment. And that's going to be for 2,000. Debit and credit for the 2,000. Let's record this out. I'm going to be here in P23. Something's in it. I'm going to double click on it, go to the end of it, and say plus, and then point to that 2,000 and enter. That'll make this go down to 0. That's what I would expect. And then we're going to go down to the M1 adjustment down below. Here's the M1. I'm in P43 equals. Scroll back up, and we want the credit of the 2,000. There we have that. That should put us back in balance. We're back in balance here, indicated by the green zeros. And we see then this is the net income for the books. And then we have the net income for the taxes, not including these adjustments for the Schedule K and M1 adjustments. So let's check out and see if page 1 I would expect to be at the 63,510 now. If we go back to our forms, we're at the 63,510. That's correct. This amount's at 0. That's correct. If I then go to page 3, the starting point here, 63,510. That's correct. Page 4, ending point, 73,510. Back to our Excel worksheet. There's the 73,510. The adjustment is its starting point, 63,510. These are the Schedule K adjustments. So that's the difference to get us to the 73,510. Then we'll go to the Schedule L balance sheet. We're in balance. That's good. Then we'll go to the M1. The 85,710 is still the book balance. There's the 85,710. The other side being the 73,510, and that's going to be the 73,510 here. So we can basically reconcile those items out. Then we're going to go to our open items list, and we could finally cross out this entire thing. So we found that one, and so I'm going to cross that out, and then we'll save this. We'll save this and move on.